travels, and to all of our YouTubers out there. And today we are joined by another super special guest. You all know Stu, he's on here every week, but we have Greg McDermott. And Greg, I understand that you and Stu kind of know each other. Can you give us a little background on where you worked, what you did, and how you guys know each other?
Yeah, thanks, Bill. Sure, thanks for having me on. Yeah, Stu and I
Of
go.
course.
We go a little farther back than we probably like to admit.
Exactly.
Yeah,
I was
I
gonna
think
say.
I think we're probably would have been the end of Bush one's presidency. That tells you how
Okay.
long ago it was. So yeah, we were both market makers down on the floor at the Philadelphia Stock Exchange
Nice.
so many years ago. We were just talking about some of the friends that we have from down there, and it's amazing how many times you come across. Even today, I'll see things that happen today, and you'll think, I remember when sort of
Yep.
that built up book of knowledge, stuff you kind of forgot you knew until you need it. So yeah, Stu and I back on the Philly Exchange, we were there so long ago that used to have to print sheets, like sheets of paper,
Trading
and
sheets, yeah.
print them out and put them in your pocket and carry if I can find it here, an HP 12C calculator. And that's how you went to work every day.
Yep.
Ugly jacket. I should have gotten it. My
You
jacket's
got to
around
have
here
the ugly
somewhere.
jacket, of course.
I have it around here somewhere. But
Yeah.
yeah, we go
And
way back, and
And we had to keep track of all our positions. Remember, we had that card, and you had to keep
oh
track
no,
of
pit cards. No, you'd hand your ticket to the clerk, and you'd be able to grab your buy and sell tickets and go like, feels like
Yeah.
about long 1500 deltas.
There you go.
1500
Right?
Del. Like
Right.
you'd have to
Exactly
just.
correct.
People have asked me like why am I good? One of maybe the few things I'm good at. And people say, like, what do you, and I just, they'll be like, how did you know? I was like, I don't know, I got good at estimating because you had to. You didn't have all kinds of computers backing you up. I mean, legitimately, Bill, I I didn't have access to a printer at
Wow.
the stock exchange. I would print
home,
my
yeah.
sheets at home. I would bring them to the floor
And
in
they
the
could have been
morning, and I would
outdated
pray
by
that I
then.
printed them
Yep.
wide enough. Yeah.
Well, a little
So,
bit of trivia here. Kind of a coincidence we have you on today because who just released earnings a little bit ago? Dell. And
memories.
Dell used to be, some people might not know this, but Dell used to only be listed on the PhilX until before
Right.
they came to dual listing or multi listings.
Mhm.
Why don't you tell us a little bit about did you ever work with Dell trading in the pits there? Or
Oh,
any
I was
war stories about
I was the
Dell?
sixth. Yeah, I was the sixth trader in the crowd.
Okay.
Stu and I mentioned one of the other ones, a gentleman we both knew very, very well who's passed away, who was just a wonderful man. The specialists are still guys that we know. One of the founders of Market Rebellion was, Ron Ianieri, also passed away. But he's the only guy I ever knew who always bought the bottom and sold the top. Like,
Sold the
in
tops.
all you had to do is ask him because he would tell you, bought the bottom, sold the top. There you go again, Ron. Got it one more time. But it was the business equity option. I was the sixth guy in the crowd. And at its peak, what do you think, Stu? 80 traders, maybe more?
Wow.
Yeah, maybe probably up in New York when they had to go to New York, probably over 100, 110.
And then
100.
they jammed us in the red room inside the door at the red room. And when I tell you we didn't stand this way, you actually had to stand this way
Yeah.
because you couldn't to get everybody.
Couldn't even get through. Yeah.
Just physically couldn't get it. Yeah, there was the old story. They definitely tried to squeeze 10 pounds of what into a 5-pound bag. That was what we were doing in the Dell crowd. So we would trade significant. That's where all the volume traded. And you had all the big trading firms. You had independent market makers, floor traders. It was a great crowd. And that was a heck of a long time ago. In fact, we were just talking about it. Where did the straddle go out in Dell? Did we say it was like
14 or something?
14? So if you paid, oh no, it was around 9. So
Nine.
if you paid $9 for the straddle, at this point, you lose.
Almost 100%.
Yeah, it's up 5. Actually, it's less than that. It's only up about 450 right now.
Okay, so
And the only way really to capitalize that, as we all know, that if you're going to own that straddle, which is a really lousy way to trade earnings as a retail trader, you have to have access to an account large enough to be able to trade the stock after hours. Like
That's
if
right.
you owned the Gamma and banged out the 1450 bid that showed up right
Sure.
away, you could have already flipped that for $2 and sort of reduce your base cost for that position. But it's a very hard way to trade. We talk about it all the time. I I suggest and encourage retail traders to really avoid trading earnings. And it's kind of the topic of what we're going to talk about, but we talk about things that you'll see and you'll hear people out, the chatter in the world, the supposed experts telling you, how to beat earnings every time. And we talk about it's sort of soundbite education. It's, how do you always win? Right. And anybody who's out there who's telling you that they always win is just not telling you the truth, right? There is no magic. There's no one indicator that will always be right. There is no one strategy that will always be right. I wish there were. Be awesome.
Oh, yeah. We wish,
right?
We do it too. So,
sure.
So I know that you actually work, you run the pit here at Market Rebellion, doing a lot of day trades. So that if somebody's interested in that, it's something you can look at, one of our many services here. But you've kind of touched on the topic that I thought would be very good, because I know you guys lived by technicals. That's kind of what you do as a market maker. It's everything short term, trying to get flat, understanding your strategies, hedges, rolls, morphs, gamma scalping, all the things we just talked about. So Stu and I like to throw out a little thought question at the beginning that we answer at the end. We're going to take a little detour this time. I'm going to throw out the question, which is, what is the best technical indicator? Now, we kind of already answered it, but I'm going to give you my take on it right there. All right. Yep. So if you really are looking for something that is going to be the best, this is what it would have to be. It's got to be something that can see into the future. Now, the other thing that people forget is that, you might say, well, RSI is really good. Well, okay, whatever, pick your favorite. But everybody knows about it. And if everybody knows about it and how it works, everybody reacts at the same time for the same reasons. So I wanted to share one last thing with you here when we get started. Somebody sent this to me, a Dilbert cartoon. Check this out. Lessons in investing. You should buy a stock whenever the chart looks like a squirrel sitting on a clown's shoulders. And the boss says, that's called technical analysis, giving the little air quotes, of course. And ASOC says, I'm not going to do that. And the boss says, good, because it doesn't work if everyone does it. So the point is that even a cartoonist knows this. And yet you hear so many people out there saying, oh, no, I can look at this indicator and I can tell it's going up. You still need to take into account price. What's the price that you have to pay for this?
Price is going to be a great
I thought let's kind of talk about that. Maybe get the ball rolling with some technicals. Maybe kind of debunk this whole thing about technicals. Because you use so much, and I know Stu does too, but so much with the technicals, how do you kind of line up your day and what do you watch?
Well, I start by running a number of scans, and those scans can I have stuff that I've developed, stuff that I use, and what I'm trying to find is with any of my scans is I'm trying to get my eyes on a chart that I like. That's where I'm trying to get to, because for me, if I don't like the chart setup, then I'm likely not going to like the trade idea. I don't care if the RSI is screaming. I don't care if the MACD is running hot across all like 6 time frames. I don't care if the volume is really high. If I'm running into a chart where I don't like the setup, then I'm probably not going to do it. If you want, I can show you.
Yeah,
Let me grab
absolutely. I was going to say, maybe even one from the pit, something, a real example would be a huge help.
Yeah. So I'm going to grab the screen.
Sure.
So, and I apologize for kind of looking off screen here. I got a couple of screens running. So this is Apple. I'm sure everyone's familiar. You've heard of them, the little phone company.
I've heard of them before.
Yeah. So we put out a number of levels we call them the usual suspects. And they're the ones that every day, and you can see the list is down here: IWM, SMH, Amazon, Spider, Meta, Adobe, Roku, Netflix, Google, Qs, NVIDIA, Microsoft, Apple, Tesla. So every day I give our traders, we call them triggers. Where's the level where you would want to get in on a bullish trade? And if it would break down, where's the trigger level you'd want to use on the down trade? And then we also go a step further and say, hey, these are the areas where likely you may see a pause. Well, Greg, how do you determine what the up level is? Well, I look for things like prior closes, swing highs. If you'll notice on this chart here, I have the simple moving averages. The red is 200. and the blue is 100, just so that the people who know Ryan and I can be confused, because his are exactly the opposite of mine. Just trying to make sure everyone's paying attention. The 50-day moving average is that dotted yellow, and then the magenta, the purple, is the 20. So I'm going to give you an example from today. We were trading about, I'm going to ballpark it here, around 241, and this was in the afternoon. Apple looked a little strong. It was back inside of this bullish candle here. That was
right.
Yesterday's candle. For those of you that don't know what a Japanese candle is, the short version is, it gives you the open, the close, the high, and the low. And on a red candle up here, that the body is, that's the open, and then the close of the body down here is the close. Green candle, it's the opposite. It opens and then goes up. So it was up in this neighborhood, and someone said to me, well, hey, Greg, I like this to the upside. What do you think? And that's the sort of help you can get in the pit. I mean, I'm there all day. Yes, got a question, ask me. And I looked at the chart. Now, remember, this is before it sold off. So I'm not trying to play Jeopardy here where I know the answer, so let me ask the question so I look smart. That's not the way I do things. But let me see if I can I'll go to the 15-minute chart and see if I can see. We were up in this neighborhood again, right around 241. It looked like it might want to break to the high side. And we'll just call this level out here the high of the day. I don't have the exact 242-ish. So someone said, well, Greg, what do you think? And I took a number of things into consideration, and those go back to what we talk about, what we're going to talk about today. I looked at it and said, well, I'm going to show, there's down here, I'm highlighting a number 4.2207. That's the average true range. And then the true range is right here. I'll explain what both of those are, but they're going to change when I move my cursor. So I wanted everybody to see them. So the average true range for Apple is $5.42. What does that mean? That means that based on the last 14 days of movement, Apple has moved $5.42 on average. The true range is how much has the stock moved today? And it takes into consideration gaps. What's that mean? So if it closes and gaps higher, the true range is from the close to the high of that day. If it gaps down, it's from the close to the low of the following day. So it encompasses the entire price movement. It doesn't mean it has to go up $5 or down $5. It just gives you an idea of range. So at that point, we were near what we call sort of like out of gas. I use the term out of ATR for the day. What's that mean? We had used about $4 of the ATR. And I said, well, we've only got about $1.40 of ATR left. And I, in general, from a chart perspective, I don't like playing back against red candle, gap down, sold it off. We gapped down and we had rallied a little bit, but we were still down on, probably unchanged on the day, maybe up a little bit, but not a really strong green candle. So I don't like this pattern of, I don't want to be the person that tries to catch the proverbial falling knife.
Right.
There are people that like to do that, and they like to play reversals. And I'm the person who says, you know what? I'd rather play in the direction of the trade, because a number of the indicators that I use are momentum, not reversal. So when you look at something like the MACD was actually positive slightly, but fading. And that is this indicator down here. My RSI was coming off of the high. Nothing caught my eye. But the big thing was we probably were going to have to stay in that trade until tomorrow to probably get it to go our way. So that adds another degree of risk to this trade, which is overnight.
Overnight risk, yep.
And with an expiration of tomorrow, I looked and I went and grabbed these are the volumes. I went and grabbed, and this isn't the exact setup I had when this happened, but the at the money call was the theta, so the overnight decay was a little bit more than this. It was about 90 cents. So I said to the person who was asking me the question, hey, I don't like the setup, which is the ultimate for me. We were over the 50-day, so I'm like, maybe tomorrow, if this candle's green, maybe I get to play, and I'll show you. I love playing with the annotates. I'll apologize for that right away. You know, if we had come in tomorrow and we had like a little green candle here, and then this was green, well, now I've reversed the downtrend. Now I might want to get involved. But the theta was going to cost me 90 cents overnight. So if nothing changed, if it just closed there and you bought the call, you needed $1.80 of movement, ballpark, to recapture the 90 cents you lost for holding it overnight. That's based on it being a 50 delta. So my point to this was not that, oh, well, Greg said don't buy it and it went down and he was right. That's not it. What I'm trying to lay out is there is no one thing here. Some might say, well, we're across the 50-day moving average, therefore it's going to go up. And I'm sure there are people out, if you search the internet far enough, they believe that.
Mm-hmm.
And it's a consideration.
That's right.
But it's sure as heck not the reason why I do it. Let me see if I can grab one of the trades from today. So we have a trade, the stock. Wow, this is, let's see if on, because we traded a down trade in on, which is ON, just straight ON. And our level in there was 48.50. So we were, I think it was probably that. We were down in this neighborhood here. Now, again, this is a candlestick chart. We didn't get really, really low. Got as low as 46.99. So it went about $1.50 below where we put our trigger in, which was right about in here. But at that point, I looked at a number of things. The MACD, if you make it bigger, we're just about to cross over. And if we looked at that on additional time frames, which is one of the ways you can use a MACD, and I'll do that, sort of see if I can find a move inside the move, was fading. The RSI was fading. The market was in general getting weak, and I had a very good target, a trigger level below the low of the day. One of the things that we talk about with the low and the high of the day, you guys know Mark, Ryan and Wayne, they've done some extensive research, and we like to call it an opening range breakout. And that the math they've worked on says that about 80% of the time, a stock is put in its high and or its low for the day by 10:30. Well, what's that mean, Greg?
Okay.
How about give me it in English? Well, the English version of that is that once you're past 10:30, if a stock takes out its high, it is unlikely to retrace all the way down and take out its low. So what does that allow us to do? It allows us to move our focus. Okay, this stock would more than likely, if it's going to move once it's above its opening range breakout, it's more than likely going to continue in that direction. Doesn't have to. But what we're doing, Bill, is we're trying to, and Stu, you know this, we're trying to stack as many of the things in our favor as we can. It's not, oh, the RSI is over 70, it's overbought,
right.
therefore
or
you must get short.
Right, no.
How many times have you heard me use the phrase overboughter and overboughter?
Every
right?
single cocktail hour.
It can stay overbought.
Absolutely,
it doesn't have to turn around.
Right.
Not a so Greg, if I came to you and I said to you something like, I know what the best indicator is, it's going to work, what would you say to me?
Since we traded on the floor, you'll appreciate this. Sold. Because it's I wish it were. I wish there was one. Right? I wish it was that easy. And I think what you have to develop is your own eye. If I had to trade monthly options, my head would explode. It's just not the way I'm built, right? If I had to trade on a monthly chart, or I had to trade on like a 1 minute chart, although I watched 1 minute charts to get sort of the move inside the move, I feel like you need to develop your own skills. And the idea that you try to put as many of the factors as you can into a trade. I'm going to show you coin, and just because that's another one we had today. And we've traded this thing up. We've traded it down. Costco. I'm sorry. I didn't mean coin. I meant Costco. I apologize. We have traded coin to the downside, but it's Costco. We've traded this so often. We refer to Costco as, because it's a family show, bleeping Costco. Because we traded bleeping Costco on this move up. And even today, these candles don't let in fact, let me get rid of the Fibonacci's to get rid of, so you don't. We use those Fibonacci's to try to come up with pricing when there's no price action to mirror the area we're trading in. Just got to worry about the scale. The true range on this is $19.27. So it moves like crazy.
Yep.
And one of the advantages we have, and this is something I think everyone can take away. ATR is something that we look at, but I tell people all the time, ATR matters until it doesn't matter. We were in this trade at 1,030, 18 was our trigger, traded as low as 1,018, so about $12. And we were getting towards the bottom of the move where the trigger was, and it was gobbling up a lot of our ATR. But because of the setup, and what I used was this low was I'm trying to find my, oh, it was an intraday low. Yeah, this was, no, I used this. I've got my cursor on this candle, the low, the price there is 1,030.18. So that was my trigger right here. We were trading above it. And I was like, look, if we break down to that, this doesn't look like a long way, but that low is 1,025.22. We traded as low as 1,018.83. So we traded through that level, and we got a bit of a bounce. Why did we set this trade up? Well, first, I had some ATR, right? Second, we broke down, we were below the 20-day. That's positive. Third, the MACD was running a little negative. Positive. The RSI kind of who really cares? And I had a really good setup. The thing that you may be, the scaling on this could be throwing people off. I like to do this sometimes and show, like, the real scale was probably more like the distance, because sometimes people think, oh, that's not very far. Well,
that's right.
The distance between here and that open was $2, right? So it's not huge, but on a day like today, where Costco has a pretty high dollar vol, people would think, oh, I can't trade that. Well, yes, the at-the-monies are about $5 or $6, but they've got $19 of ATR. Tomorrow,
that's right.
I'm not telling anyone to go trade Costco tomorrow, right? Let's be clear. The lawyers will want me to say this. Your mileage may vary. Void or prohibited. Not available Alaska and Hawaii. Like, I'm just explaining why ATR sort of becomes a variable that we like, but it is not the only variable. It's not like, oh, well, there's no ATR left, let's not trade that. That's not
exactly
true. It's a consideration. And tomorrow, theta will work our way, just like it will on that Apple trade, either up or down. We're playing on a razor's edge there because they expire at 4:00. So you do have to be very nimble, but you can get a stock like Costco that's got $20 of ATR, and tomorrow we'll play with the old theoretical value. What are the at-the-monies tomorrow going to be? So the 20 calls are going to be about $2 or $3.
Mm-hmm.
$3 probably. So that's where ATR, Bill, I believe, is a really big help, is when you can find earlier in the week, because we're talking about weekly options, earlier in the week where you can get inexpensive options that have a smaller ATR and you're willing to sort of stay with them for a couple of days because the options absolute dollars are not very expensive. And then as we shift towards the end of the week, the ATR stays the same. I can buy these. I mean, you look at the difference in price for this is next Friday's expiration. The at the money calls are $25, $26 in Costco. Tomorrow, you probably can buy the at the money calls for about $3 or so. Now, remember, again, I'm not telling you to go buy Costco. I'm purely using it as an example of how ATR is not in and of itself a magic bullet.
Correct.
But used in conjunction with the setup, and we've talked about it a lot, Bill. There are days where like this $2, or let's call it $3, where that $3 option is really cheap, right? And we could all come up with $3 options that are really expensive, right? It's in context is where it matters.
Implied volatility. Stu and I talk about that all the time in Q&A. People think that it's in absolute terms, that you don't buy an option above $3, or it's no. A $20 option could be incredibly cheap, and a 75-cent option could be super, super expensive. So we have to always say, what are you getting for it? I wanted to ask you something else. You mentioned a term about a swing high, and obviously there's an opposite for a swing low. Could you explain to the viewers here a little bit what a swing high, swing low is, and how you might use it in determining whether you should go long or short?
Yes, I'm going to try to find, I'm looking at two examples to the downside from today to see if I have a, this one doesn't necessarily, this doesn't necessarily show it. I'm trying to find one of the examples. Let me look at snow, because that was okay. So here's an example. And this is back. So this is snowflake. Now, it doesn't impact us. It wouldn't have impacted us on this trade, but here is an example of a swing low. Oh, you know what I can do it on? I actually can show you on the spiders. That's a better example. Let me get rid of these.
The Apple on the intraday Apple 1 minute chart. I mean, you could see those swing highs, and it kind of falls right into what we were talking about. You don't really want to get to the upside. Somebody's asking about, should I buy it to the upside? You don't want to get to the upside until it really breaks out through those swing highs.
This is there's a perfect example, Stu. Like you said, there's your swing high. That was in the morning. And generally when we trade,
just for viewers, what makes that a swing high?
Because it was a movement to the highest point of that, in this case, that day. Right. And then the candle gave a reversal, and we began to move down. So
it's not the high, it's a swing high. It's in that time frame right there.
Right. And you could even say, and I'm going to go back to the spiders and show you why I just had one of the, I just kind of had I had a bad feeling today. I didn't feel like that opening was really strong. I thought the Qs and the spiders, they rallied them, but it felt half-hearted.
It fell quickly.
Yeah, I wasn't. So, and if we look at, I'm going to get a little bit deeper. This is the SPY, the spiders ETF. And usually I don't have it drawn here, and this may lead to another conversation. But I just put a little circle in to remind me that there's a gap there. So I just leave them on the chart just so that I can see that they're there. So what I would have called, and to do exactly what you asked, I'm going to find, where the heck there it is, annotate. We'll make it yellow so we can see it. So I would call, this is the swing low of this move to the downside, right? We traded down, they got to this level. Now look, it's not like this could also be considered a swing low. There isn't necessarily just one swing low.
That's what I was trying to get people to understand. Everybody thinks it's a low, and it's not.
So that was a swing low, and you could even argue right there, like that was a swing low. So it traded up, it came back, hit that low, traded up again. That would be your swing high. It was also the all-time high in this case. And then it went down, and what we were looking at is I had eyes on this one, and the level there, I got to clear off these so I can figure out what that exact number is. The low there was 589.56. And I'm staring at that when we did our levels this morning and said, we take that. Now this gap is, to me, clearly in play. And we did fill this gap. The high on that gap is 585. The low today was 584.65. So this gap's been filled. Theoretically, I can take that out from the visual standpoint. But when you're looking at the movement, why was this one so interesting to me? First of all, we've had a continuation of red candles.
Yep.
And I tell people all the time that you want to sort of look at what is the candle telling you. So, for example, we had a big down day here, and this was on the 21st of February. We gapped it up, right? We talked about it. So that is our open. They rallied it, and the sellers were like, yes, sold to you. And they closed it down. They gapped it up or sideways ever so slightly on the 25th, Monday. No, Monday the 25th? Sounds about right. I don't know. Whatever the 25th was. I guess it was Tuesday. They rallied it up and they sold it off. What happened yesterday? They gapped it up and they sold it off, although not as pronounced. What happened this morning? They gapped it up. You guys see a pattern developing here? They gapped it up. They sold it off. Not only couldn't they break, there's my 50. I broke the 100, which matters. My MACD on the daily is fading. The RSI is dropping down. We got down to into the neighborhood of I don't know, like 34, 35 on the RSI. And I have a gap there. So now I'm like, okay, well, all those things together lean me to the downside. Right? It's not that actually, you look at the ATR. What was the ATR on this thing is 7. It traded 13. if I would guess, what's the low there? 89. When we got to that swing low, we probably had already used up all of our ATR. And then we invoked the ATR matters until it doesn't matter.
Yeah.
And the other pieces of this setup outweighed from where I sit simply the ATR.
The ATR, absolutely. Yep.
So that's what set this trade up today for us. In fact, we actually went all the way through. Like I said, I send out the levels every morning. Somebody in the pit's like, "Hey, Greg, I need more down levels," which is my favorite thing to hear. Either I need more up levels or I need more down levels because
that means the
stock's running.
Yeah.
Yep. We got a great run in. So
Yep.
that was a really good setup. And now you've filled the gap. We talked about it earlier, guys, that this now from a technical standpoint, and remember, I'm not a certified market technician. I'm a guy with some charts and some lines, right? Someone might argue where I draw a line. Well, you should, that's right. It's my chart. I get to draw lines where I want. And same thing for anyone listening. Find out what works for you, right? You might be someone that says, "Hey, I want to draw trend lines." And you could, that's probably a really aggressive trend.
Let's be clear about a couple of things for everybody.
Sure.
Go back to that. Put that back there for a second, the way you just had it. Okay, so let's be clear about something. So when the stock a few days ago was trading like 610,
right?
We're not really thinking about, oh my God, it has to trade down and fill that gap. It's not even part of the conversation.
Nope.
Right.
Not even. No, it's there, but we are never going to say it has to trade down because there's
doesn't have to do anything, right?
Right. It's good. It's there. We know it's there. We notate that it's there. And if it does get down to that neighborhood, we will take a look at it and then we'll use that gap in addition to the other tools that we are using.
Exactly. I think that's what Greg alluded to. He said it now becomes in play as opposed to saying 100 points ago that therefore it's got to get down there. And it just doesn't.
I use the word gravity. I talk about its gravity.
Like that too.
Like the gravity now becomes, and also
real.
What you want to look at is, so if this is the case, and if you were looking for a down trade, the place you might want to either, and this it would help you either would want to get out.
Cover.
You probably want to look at that gap fill as an area where generally, and it was back to what you said about everyone knowing it, right? Everyone can see this chart, right, Bill?
That's right.
So, Stu, we all know that that's the gap fill. So yes, you could argue, well, it's really the charting. It's really self-fulfilling prophecy. I don't really care, but the thing put the brakes on right at the gap fill. Does that mean it won't bounce tomorrow? I don't know. I'll tell you tomorrow morning. You know what I mean? But you're ended up. And then one of the other things, Bill, we talk about a lot of times I like people to use vertical spreads. If you had this on, where would I want to have my short strike? Right at 585, right probably.
Yeah, right there.
That's right. I want to go right to my short strike. That's right where, as you're setting up a trade, something like that matters. Because, Stu, to your point, I mean, like, okay, that gap actually filled. But I mean, we could go back and find plenty of gaps in plenty of charts. The idea that a gap must fill, that a gap must fill impacts your decision today, regardless of where it is based on price action, is an oversimplification.
Way over. Yeah. So
right, because then you never would have done any up trades here.
That's right.
Right. You mean you never, once it gapped here, you would have been bearish the whole way, and you would have missed a 52
boatload.
You'd have missed a $20 move in the spiders.
Or how about this? Or, I'm going to sell it at, what's that, 590? I'm going to sell it at 595. I'm going to sell it again at 600. I'm going to sell it again at 605.
Oh, yeah.
And now it becomes, all right, well, how long can I stay liquid?
How long can you sustain that?
Until I'm going to be right, which I don't really know if I'm ever going to be right. But how long can I stay in the game? In the meantime, you dropped all this money, because your kind of ego got in the way, or you read somewhere that a gap has to fill.
And to add to that, it doesn't even matter how deep your pockets. Well, I guess it does, but the broker could come in and say, look, we don't care about your conviction. We're shutting you down. If you can't meet these margin calls.
Yeah.
And a lot of people say, but I just know it's going to reverse. Well, if you can't meet those margin calls, the broker's going to close it for you. So it's
ultimately the broker's at risk. They're standing between you and the OCC.
We're part of this trade too. Yep. So Greg, let me ask you about the gap fills, because we get a lot of questions about that in Q&A, and I'm sure you do too. Mm-hmm. And there's, I'm sure, a lot of different opinions on it and controversies and things. But I want to hear from you if there's a gap. Let's say we were going to where that circle is, that green candle just on top of it, where the gap is. Let's say that that's today. When do you start saying the gravity of this is becoming less and less important? I mean, in other words, 6 months from now, are you still going to say that that gap is in play? Where does it start becoming less important?
There's two things that I look at. First of all, I look at just the simple price action.
Mm-hmm.
Are we just running away? But the other thing is, once again, I like same reason I hang out with you guys. I hang out with Ryan and Wayne, smart guys, and they've actually done the math. And they've found that in general, after about 4.5 days or so, 5 days, my word, gravity of that gap is less impactful on the price action going forward.
I would agree.
So it's a general rule. After about a week, you're probably not. And I'm going to give you an example.
And even if the gap does fill, it doesn't mean that's why it filled. Right? I mean, there's some big piece of news that drives it down there. Everybody says, oh, today's candle is because of the gap. Well, that's just not true. Just right.
It's a representation.
I agree.
Of price
I've
action.
always said within about 5 or 6, maybe 7 days, I wouldn't be playing it for that gap.
Now, listen, that may sound a little contradictory to what we were just saying, because when's that? Middle of January. We're now 6 weeks later, and now we're talking about the gap that we just said we don't really care about after 4 or 5 days.
But that's because it got back into the neighborhood.
That's the art of this. That's the part that you can't read in a book and say, well, this is the way to do it. It just doesn't really work that way. Right. We know it's there. We just don't really care that it's there until it matters to us to work into our decision-making process about when and where we might take a short delta trade. By the way,
like Greg said, you're in the neighborhood right where his cursor is. But if you go back to that green candle back at your swing high there, you're not saying, oh, let's get short because there's a gap down there. That's my point, is you're saying, given the fact that the candles have fallen, now we'll also consider the gap.
Right. And it's price action that drew us back into the gap.
When we get there. Yeah.
Right. And some will say that you probably could maybe expect a bounce. I'm going to show you one, UPS. And once again, I'm not making a recommendation here. I'm just going to show you. I like to use big circles for big gaps because I'm not really that
big
smart.
Gap right there.
I just, I like the, and this was an earnings. It got, smoked here on UPS. Well, not only did it get smoked, but if you look at the price action, they gapped it down and they just kept selling it. Right now, it got all the way down. It did bounce up. But this candle, there are those who would say, oh, well, it's got to reverse. And there are people that probably bought, whether they bought calls or whether they bought puts, bought calls or bought stock, but they probably bought it here and here and here and
that's
here.
Right, all the way down.
And here and here and here and here. And then, then they're down to zero. And that's a tough way to make. So what I do is, again, this is a trade we have out in the pit. I'm not telling you to get long. Whatever qualifiers I need to make, this is for educational purposes. But we've been watching UPS because this level here, the 117.98 was the high of this. And you can see I have a line drawn there. And it's kind of gone up and it's tapped it and it tapped it. It got a little higher today, 118.73, but it hasn't really
having a little trouble.
Yeah. So what does that mean? The buyers and sellers are having a little bit of a standoff. Yeah. And for me, with a chart, if I can get an area here where I sort of, I've tapped it and tapped it and tapped it and tapped it, and I have this gap sitting out here, I'm thinking that if I can take out, and I would probably use that today's swing high, that you have a chance to get back into this gap.
Get back into the middle.
Now this gap matters to me. But when it's down here, I'm not saying, and even, let me clear these, even when I take, and I like to talk about, I don't like that first green candle on a gap down, or I don't generally like the first red candle on a gap, because once we're here, gapped up, sold it off, gapped down, sold it off. Now look at this, they gapped it up and they held it. They gapped it and they held it, got a little higher. We're back. There's truly a gap on this chart right there too. And they kind of worked back into it, but nothing really explosive. So this, to me, lifts my eye to the high side, but it's not the reason I do the trade. Just not. It's a consider now it is, because now I've gotten back to this, to me, being a critical level on the chart, that the high of the gap down.
Yep. I can't believe how fast the time goes in here. Let's do a couple of quick questions.
I don't take breaths.
We gotta have you back on here because I know people love this stuff and you've got so much knowledge to share. But let's talk a little bit about the indicators and some of the oscillators.
Sure.
People could polarize a room about whether it's RSI, stochastics, MACD, but they usually argue for one, and we kind of covered that before. That's a bad idea. So my first question is, even if you use any of those, how many do you use, and which ones are they?
Well, you can see on my chart here, I've got, and I'll expand them so you can see. That's the ATR.
ATR.
That's the MACD.
Yep.
Just the normal setup daily. It's on the daily time frame.
Okay.
And then that's my RSI.
Okay.
So I'm trading on a relatively short-term basis.
Mm-hmm.
So I've gotten used to this sort of a momentum, and let me see if I can grab the screen. So I also look at, and this is, people are now going to be like, what is he showing? I'm going to stop. I'm going to show you another screen, and I'm going to apologize in advance because the screen's kind of it's a bit of a information overload, but that's the way things go. That's what happens when you got 4 32-inch monitors up in front of you. You got to use some space. So here's,
only 4.
This is MACD setup, 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, and the daily. So, and you got to kind of dial this thing in a little bit to see. And I use this in and of itself as sort of, because the daily takes a day to come your way. And that is right here. The MACD, the setups are all the same. So I use this and I'll look at this and say, okay, well, what's happening inside? I like to call it inside baseball. Like, what's going on? I'll put Apple up and we'll show you. We'll just look at Apple just because everyone likes Apple. So that is an inside look. And I make the MACD big so I can see the green, obviously green up, red down, pretty self-explanatory. But I'll use this as another level for sort of confirmation. If I'm seeing something, and I use those indicators, I also will use them as part of the way I initially scan for opportunities. So any of the scans that I do, any of these indicators that I do, the MACD, the RSI, I consider ATR, although that's really not an indicator. I like the simple moving averages, but all of that for me serves the purpose of getting my eyes on a chart that I like. And I could probably, I'm going to just pick a stock. I don't even, what happened with Goldman again today? Yeah, I'm trying to come up with an example. The last few days have been kind of hard coming up with ideas for us. And the reason being, without a setup, it's not like, oh, well, stocks are down, buy puts, and you're fine. Finding the right setup is important. Actually, Tesla was one where we had, like, this setup to me is nearly self-explanatory. Just sold. I want to make sure I'm still showing the right, make sure I have the right chart up. So this is self-explanatory. Like it put a high in, down. Now there are those who would say, oh, well, it should reverse because the MACD is negative. It should reverse because the RSI is below 35.
It's come up on the upswing, right?
Right. It should bounce on the 200-day. And I'll give you that. It may do that.
Sure, of course.
But my first look is to the downside. And as I indicated earlier, I just find it easier to trade. I don't want to be the person trading necessarily that first green candle.
Right.
On the reversal.
Stu and I talk about a 2-candle bounce for most people is say, let everybody else test the waters first.
Yeah. And now I will give a disclaimer.
That it's actually making a turn.
Right. Tell me it's turned because you don't have to trade. I mean, one of our subscribers made t-shirts for us. Just that it was from one of the many dumb things that I say, but it's deciding not to trade is a trading decision.
Of course it is.
Of course.
So you look at it and for this, now I will give a qualifier. Tesla is one of those ones where on a Friday with no theta, it has a tendency to make, I like to call it a burst. It'll put in a little bit of a range and it'll make a run upside downside. And we sometimes can catch a little scalp in there. Now, again, I'm not telling you to scalp Tesla. I'm just sort of trying to give more examples of how we use it. And it goes back to the same idea of it's $19 for the ATR, which is about the full range you would expect. But tomorrow, the 280 calls are going to be worth about $2 or $3. So there might be opportunity. So all of my scans, Bill, to answer your question specifically, and the MACD and the RSI, for me, all funnel back to the chart. And if I can't take out a swing high or a recent close or any of the other things, break over the 200-day moving average. But I will tell you, like if we take out if it closes right here, I'm going to have the 200-day moving average circled on Tesla tomorrow for sure. Because we break the 200 in there.
Oh yeah.
I mean, it could be Katie bar the door. Because if you go back, we haven't closed below since August 14th.
Yeah.
Look at the chart back. I'll scan it. So there's that red 200-day, and this candle is the close below it. Closed. It was above it for a while, quick underneath, close above, close below, and then it's been above the 200-day moving average. And I'm going to make a last point until I make my next last point. But like the fact that there's a gap here now,
becoming more relevant.
Yeah, the price action, the low there is 275.62. I can almost promise you that's going to be one of our down levels tomorrow, for Tesla. Now this matters. This gap down here, down to the high at 218.72.
Right.
Now it matters. I didn't care about it up here.
Yeah, see, that's what we get a lot in Q&A. People will look at those highs and they'll say, but wait a minute, that gap has to fill. You're like, no, it doesn't. It's all has to be taken relative to everything else. So yeah.
And we said it. I'd like to leave everybody with this thought. The idea here is, I think when you find, I'll use the term very, very loosely, gurus who want to get you to believe that they have the magic bullet, that if you always do this, then you never lose. First of all, they're not telling you the truth. And second of all, they're going to their hope that you want to turn over responsibility for your trading to the system. Right?
It's not my fault.
System.
To the
in fact, like I'm a big college basketball fan, and there's some teams out there that just say, well, the analytics say you should shoot a lot of 3-pointers. And when they make them, the coaches say, see, told you. And when they miss it, they're like, what was the analytics? I'm a good coach, but the analytics let me down. And I always say, well, first thing you need to do if you're going to do that is you might want to get some guys that are actually good at shooting 3-pointers. That's a really solid start. But what they're doing there is you sort of turn over the responsibility for the result to the system. I wasn't wrong, but look, we're the ones that push the button. You're the person that pushes the button. So it's your responsibility to get a feel for what works for you. And I'm sure I'm not bad-mouthing people who are not Market Rebellion. There are lots and lots of really smart people with really great information. But whether it's Market Rebellion or it's somebody else, I think you need to figure out what works for you. Plenty of people who deal with me all the time in the pit. I'm sure there are things. We have one guy in particular who he and I will go, he'd be like, Greg, I really like this. And he'll maybe be playing a reversal inside of a big bearish engulfing candle from yesterday. And he's playing the green reversal. And I'll say to him, well, hold those for me and you can sell them to me tomorrow, right? You inventory those calls and I'll come get them tomorrow. And that's how you get a market, buyers and sellers. So
that's right.
Learn what works for you and try to develop your own trading style. Don't try to trade like Greg. Right? You may pick up some of the stuff that Greg trades, the way he trades, and say, wow, that really does make sense. I understand that. And you may look at other things like Greg's nuts, and probably am. So just take the onus on yourself for you to become a good trader.
Yep.
That's
and
the
I think
idea.
You just answered. I was going to ask ahead of time. One of your cohorts, Steve Levitt, Stu and I had on probably a year ago, Stu?
Yeah.
A little over. And I always like to close and say if there's some kind of a little pearl of wisdom, a little golden nugget that you could leave people with And I think you just answered it, to take responsibility for your trade. And that comes from having good education and understanding what it all means and how can you use it based on your trading styles and risk tolerances. Steve left us with a good one. Stu and I still quote all the time, 3 words so powerful: know your risk. So I think both of those in combination.
What a great guy. He's one of the other guys from the Philex that we've known forever and ever.
Yep. So we appreciate you sharing some of your insights from many. How long were you down on the floor anyway?
I was in Philly for about 10 years. I was also on the Amex, the New York Mercantile Exchange.
Oh, I didn't know
I used to get coffee for guys at the Amex when I was a clerk there, and was in the crude oil pit at the New York Mercantile Exchange. If you've ever seen Trading Places, well, that's actually technically that's the gold pit. It wasn't the frozen concentrated orange juice pit's was about this big. It was like 4 guys leaning on a post. But yeah, I was that floor. So, and for me, the most important thing was that men's room. I got to go to the members' bathroom. That was like, I didn't care about getting the badge. Like, man, I get to go to the members' bathroom. This is going to be great.
Well, we'd love to have you back on sometime soon to share some more war stories and some more insights. And for anybody who might be into doing some very serious short-term trading, can join us here at Market Rebellion with Greg, Ryan, Wayne, guys in the pit, and learn stuff like this every single day. Please give us a call, marketrebellion.com. You can find our information on the website. So with that, I want to thank you so much, Greg, for taking time out of your day. I know you keep super busy. And Stu, as always, but Stu's on here with me every week. And we'll have you back on soon.
Yeah,
looking forward to it, guys. Everybody have a great evening. Thank you.
Thank you so much. We'll see you then. And thanks everybody out there too. We'll see you soon.